All right, let's dive right into this analyst briefing on Tilray Brands' third quarter results for fiscal year 2026. The company just delivered a record-setting quarter, and we're here to break down exactly what these numbers mean for their strategy, their financial health, and what might be next.
Okay, just a quick but important note before we jump in. This explainer is strictly for educational purposes and should not be taken as financial advice. All the data we're looking at today comes directly from Tilray's official Q3 2026 earnings release.
To really get a feel for this quarter, let's start right at the top with a quote from CEO Irwin D. Simon. He's not mincing words here. He's framing this as a huge success and, more importantly, a clear sign that the company's global strategy is really starting to pay off.
So, here's our game plan for this briefing. We'll start with those record-breaking headline numbers, then we'll dig into what's actually driving that growth. After that, we'll look at the big strategic move with BrewDog, check in on the balance sheet, and then wrap it all up with the outlook and our key takeaways.
Let's kick things off with the top-line numbers that are really defining the success of this quarter.
Tilray hit a record third-quarter net revenue of $207 million. Now, this isn't just a good number, it's the best Q3 in the company's entire history. That signals some serious momentum as they head into their final quarter.
And what's really key here is that this record revenue comes from strong organic growth. We're talking an 11% jump year over year. That tells you the core business is healthy, and this growth isn't just smoke and mirrors from acquisitions, it's coming from real, fundamental demand.
You know, revenue is one thing, but profit is another, and that's where this gets even better. That record revenue translated directly to a record Q3 gross profit of $55 million. This shows they're not just growing, they're growing profitably.
So, the big question is, where did all this growth come from? To really understand how they pulled off these record numbers, we need to break down the company's different business lines and see what's firing on all cylinders.
Okay, if you look at the breakdown here, you can see just how diversified Tilray's business really is. Their distribution arm has actually become their largest segment, making up 40% of revenue, with cannabis right behind it at 31%. This mix is really central to their whole strategy of spreading out risk while chasing growth in a few different industries at once.
But here's where the story gets really compelling. It's not just that those two segments are the biggest, they're also growing the fastest. The distribution business shot up an incredible 35% year over year. And the cannabis business wasn't far behind, with a super strong 19% growth. These are the engines of the company right now.
And if we drill down even further into that strong cannabis segment, there's one area that was just an absolute standout performer, and it really validates a huge piece of Tilray's long-term game plan.
Yeah, check this out. The star of the show was international cannabis, which exploded with 73% year-over-year growth in net revenue. I mean, that is just massive. It's clear proof that their big bet on markets like Europe and Australia is really starting to pay off in a huge way.
And speaking of that international success, it's the perfect lead-in to our next topic. Let's look at how Tilray is now doubling down on that global vision with their recent, very strategic acquisition of BrewDog.
Now, it's important to note this happened after the quarter closed, so this is all about their future strategy. Tilray bought BrewDog, the #1 craft beer brand in the UK, for around £40 million in cash. This is a major forward-looking move that screams they're getting very serious about their global beverage plans.
So you might be asking, why BrewDog? Well, this is about way more than just adding another beer to their lineup. What they're really buying here is critical infrastructure, established distribution channels, and a powerhouse brand that lets them hit the accelerator on growth in all these key global markets.
Of course, making big, aggressive moves like that requires a rock-solid financial foundation. So let's pivot now and take a hard look at the health and stability of Tilray's balance sheet, which is crucial for any investor.
In this slide, well, it really tells the whole story. Just look at the transformation here. In just 1 year, they've engineered a $40.2 million swing, going from being in debt by nearly $37 million to having $3.5 million in net cash. That's some impressive financial discipline right there.
And on top of that, they're sitting on a really healthy pile of cash. With almost $265 million in cash and marketable securities, they have a ton of flexibility to fund their day-to-day operations and to jump on future strategic opportunities, just like they did with BrewDog.
And to top it all off, they're not just sitting on cash, they're actively paying down debt. They managed to reduce their total outstanding debt by another $4.2 million just in this quarter. It's another clear sign of very disciplined financial management. All right, so we've seen a fantastic quarter and a much stronger balance sheet. But what does this all mean for the future? Let's tie these results to the company's own guidance and wrap up the core investment story here.
Well, management is clearly feeling confident. They've reconfirmed their guidance for the full fiscal year, and they're projecting an adjusted EBITDA, which is a really good measure of profitability, of between $62 and $72 million. That represents a 13 to 31% increase over last year, showing they expect this strong performance to continue.
Okay, let's bring it all together. If you're a stakeholder, here are the 5 key things you need to walk away with. 1. Record-setting performance thanks to their diversified model. 2. Powerful growth coming from their key international and distribution segments. 3. A bold, strategic leap into the global beverage market. 4. A much stronger balance sheet. And 5. Clear confidence from management about what's to come.
So, I'll leave you with this final question to think about. Tilray has put all the pieces on the board. They've got a diversified platform, a clear global strategy, and a strong balance sheet to back it up. The big question now is, can they leverage all of that to deliver sustained, long-term value for their shareholders?
And that wraps up our briefing on Tilray's Q3 results. If you found this breakdown valuable, do us a favor and hit that like button. And be sure to subscribe for more deep dives into the companies and trends that are shaping the market.